Hello everyone to this options talk 16 between Raghunath and me. And as usual, I'll start with the uh, roundup of what has happened in the week and what we can look forward to for the next week. So heading straight to the charts which I normally show. Uh, the action on Friday last couple of hours was quite bearish, but is it really so? That is what we will see now. If you look at the Nifty spot EOD chart, you'll see a 45-degree trend line, which is a very important tool on point and figure charts, all the way from the all-time high to here, and Nifty is still above it. So that is not at bearish, of course, above the moving average as well. And there was a good, in fact, an anchor column here from 11,300 to almost 11,600. So as long as Nifty is above this anchor column, there is nothing to worry. So only below, maybe a close below 11,450 or so, then there's a cost to worry. But again, that will be still above the moving average. Moving average is still about 11,417. So we are not really worried about any bearishness as long as Nifty is above 11,400. That is a key reading from the Nifty chart. Now coming to individual call and put. What is the 11,500 put saying? Because this is the at the money put right now. Though there was a bullish action on this put on Friday afternoon, in fact, there was an anchor column. But if you see on Thursday, here, there is a big bearish anchor column from all the way from 150 down to 68. And as long as that is not crossed, which is a level of around 150 on the 11,500 put, I would still not be bearish on Nifty. At the same time, you'll see there is almost something like a double top here at 130, 127, 130 here. So that itself can act as a resistance. So 130 to 150 are the two is the price band on the 11,500 put, which should be watched out for on Monday, because in case the bearish action continues on Monday, only beyond 150 on the 11,500 put, we need to look at any bearishness in the market. Now, if you look at the 11,500 call, this also is approaching support. This low near 75.80 a few days back, and yesterday's low was also near about 90. So there is support again near 70 to 80 kind of levels on 11,500 call. So the band of 130 to 150 on the 11,500 put and near 70 to 75 on the 11,500 call. These two bands will play a big role in what is likely to happen till expiry on 24th September. So that these two levels need to be watched. Now the more bearish activity was seen in Bank Nifty. So this is the 22,000 put, which is again at the money. Now here, of course, Bank Nifty, a lot of people have seen has broken down on the daily chart and even on the candlestick chart, and it was really bearish action on Friday with a huge selling with big volumes also. But if you look at the 22,000 put, as long as that, see here, it had gone to 550, 560 once, then it went to about 490 once, and again it made a similar top on Friday. So again, there is a resistance between 500 to 550 on this 22,000 put. So as long, which means a support of 21,500 kind of levels still expiring. So as long as Bank Nifty is not going below this level on 21,500, or the put doesn't go above 500 and consistently trades above that, here also we might have a chance of a bounce till expiry. Now I'm going to quickly show another chart which might be able to give a good trade next week. Tata Steel, though metals have been an outperformer over the last many weeks, Tata Steel has been weak over the last few days. At the same time, here the 400 put has made a double top near 15. In fact, over here it went all the way to 22, 23, then got sold off. Again on Thursday it went to about 15, which was the same level as this, and then again got sold off. So as long as Tata Steel is the 400 put is below 15, you can look for bullish trades in Tata Steel. Of course, depending on some intraday price action, not blindly, maybe on a candlestick chart or maybe on a Tata Steel 400 call. So this might provide a good trade next week, Tata Steel, which might go on till October expiry also. I'm not sure, but then of course we have, because problem is September expiry is on 24, so we still have about 4-5 trading days in September, but which will be in the October expiry. So this is all from my side. We have a surprise for you after Raghunath. So right now I'll switch over to Raghunath, and then we have a third guest here. I mean, the second, we have a guest here, a third speaker, who we will go to after Raghunath. So over to you, Raghunath.
Okay, thank you, AP. Okay, folks. In option stock 8, we talked about what are calendar spreads and how you can use them, different conditions, and what affects those calendars. So during that time, I said that I'll do a session where where I will show these calendar spread adjustments using option simulator, so that you can understand how it looks when you do this in real market. So these are the standard disclaimers. So just to summarize what we had talked, a calendar spread involves selling and buying options of the same strike but of different expiration periods. It's also called time spread or horizontal spread. So in a standard calendar spread, we sell front month option and we buy back month option. We can also use in weekly month options, and ideally we use at the money option strikes for this kind of strategy. So this strategy benefits when the underlying movement is stable or sideways and there is an increase in implied volatility. And it suffers when underlying makes large and fast moves and there is a decrease in implied volatility. And there is also a gamma risk. So these were the entry rules and exit rules I talked about. For monthly options, we enter 30 to 40 days before expiry of the front month. And for weekly, we do it 10 days before the expiry of front weekly option. Ideally should be done when there is a low implied volatility or when there is backwardation of implied volatility. That is front month IV is greater than back month IV. So we short front month at the money option and buy the back month at the money option. The exit rules are target is 50% of initial maximum profit and stop loss is 50% of initial maximum profit. If none of this happens, we exit on Friday or Monday before expiry date. So I talked about 3 adjustments, and we adjust when the underlying price is about to reach one of the break even and the stop loss is not yet hit. So we adjust by rolling up or rolling down the front month short option to collect more credit and increase the profit zone. Another adjustment is by adding one more at the money or slightly out of the money calendar spread to increase the profit zone. And the third adjustment is to roll over the front month short option out in time, like you can move it to a weekly option. So today we'll look at 2 adjustment methods using 2 different positions, in 2 different expiries. Okay, so let me go to the option simulator. So first we'll do a calendar spread using July expiry and August expiry. So we will short the front month. In this front month is July expiry. So we short at the money put option. We'll do a put calendar spread here. So 10,300 is this is a strike. So here is the put. So we sell the front month put option, and then we buy the back month put option of the same strike. So the back month is the 27 August expiry. So 10,200 we buy. Okay. So this is how the calendar looks. And then please pay attention to this maximum profit. So 15,700. So our stop loss or the target in this case should be around 7,500 to 8,000. So we'll proceed one day by one day, and then we see when the adjustment is required, we'll do the adjustment. So we proceed. So pay attention to the break even. When it gets too close to break even, we do the adjustment, either on this side or on this side. Now remember that there are 2 kinds of adjustments. One is by increasing the position size. The other is moving your front month short option. Okay, now we are pretty much close to the break even. So now what we'll do, we make the adjustment. So here we move this particular put option, which is 10,300 put. We cover it and then move a little bit close to this, maybe 10,600 put option. So we cover it at 104.95.
Basically, you're booking profit in this and opening a new position, right?
Yeah, we initiate a new position.
Yeah.
So this is front month, right? So we choose the front month expiry again. So and then we get the option chain for that particular time period, which is 7th July, and we do 10,600. So 10,700 is the current price. So we'll do 10,600. So the idea here is we collect little bit more premium and then we expand our profit zone. So now we expanded our profit zone. And then we proceed further again. Okay, we are in profit after some time. See, the advantage of adjustments is that even after moving so much, like 400 points, we are still in profit. So that is the biggest advantage you get of using calendars and adjustments. So now we are now getting close to breaching this break even. So we can again move again one more time we can move. So we cover 10,600 put here for 30.25.
But the FAR month remains at 10,300, right? That you're not changing
Yes, that is not
next month.
changing. So yeah. So now this 11,100. So we can go to maybe 11,000 or 10,900 just to be safe. So we short 10,900 again, like here. So we sell this. Again, the front month option we sell. So now it looks now there's no potentially there is no loss on the upside. So we'll keep on doing and see how much we'll gain. So now we are getting close to expiry now.
In any case, you have to cover 3 days before expiry, right? You don't have to wait till 30th July.
Yeah. So now we are almost pretty much onto the Monday. So now we
Yeah.
can cover here. So around 4,000
Right.
profit. So remember that we started when it was 10,300. So
Yeah.
almost 800, 900 points, and we're still in profit. So simply we did only 2 adjustments and we're still in profit. It's so that is the power of adjustments when you are doing this calendar spreads. So now I will show you the next adjustment using the May and June expiry. So we'll go to the May one. Sorry, June and July. So we go to the June expiry, and we start it on Friday of May. Okay, and then we short June expiry here. This will be our front month. So at that point of time, the price was 9,400. So we short 9,400 put. And then we do the same with July expiry, 9,400 here. We buy it. All right. So this is the initiating position, and here you can look. It's 14,000 is max profit. So in this case, 7,000 will be stop loss. 7,000 will be the target. So we'll proceed further. Okay. So don't get scared if suddenly it moves and goes into loss. So now we have breached our the break even here. So now we have to adjust. So we cover this option at 74.25, our front month. So now it's 10,100. So we can do maybe 9,000 We can do 9,900 maybe, or around 10,000 maybe. Okay. All right. So we short at 10,000. Like we can choose, 100 points below the other money strike, just to be on the safe side. So that we also have enough room on the downside as well. Okay. So now we are here not really looking at the Greeks for the adjustments. We're only looking if it is going to breach our break evens. Okay, we are so far no stop loss has hit, so we are fine. So now suddenly there was a big gap down. Since we are doing this by one day each, so we missed that gap. So what we have to do is that go back and then we go back to a time where it is about to breach our break even. So we have to on that particular 11th June, before that gap down, we have to go to that particular place where it was about to breach the break even, and there we do the adjustment. So I'm doing it day by day because we can make it fast. That's the only reason. So now we are doing 30 minutes so that we know exactly when to do the adjustment. All right. So still we are not yet our stop loss. Okay. We're still fine. It's not still reaching the break even. Okay. Now it's getting very close. So now at this point of time, we choose the second adjustment option. Now see, we already moved our strike here. So there's no point into bringing back because we are not going to get any additional credit and we cannot increase our profit zone. So what we can do here is that we add one more calendar spread here. So we add slightly out of the money. So we can choose around 300, 400 points. So here we can choose maybe 9,600. Okay. So we get the option chain of that particular time point. And then we short 9,600 put. The idea is here to increase our profit zone and our break evens as well. And then we choose our 30 July, we buy it 9,600. Okay, perfect. So our break evens have also increased and our profit zone is also increased. And now we proceed further. So we are still safe. Nothing is happening. We are getting close to profit now. So we are in profit already. So we are already in profit of 5,700, 6,000. So now we almost reached to, on the Friday or something like that. So we can exit at this point of time. So now remember again, we started around 9,400 and now we are at 10,300. So 370 to around 1,000 points and nothing has happened. We are still in sitting pretty with our profit. So this is how you have to do your adjustments with this simple adjustment tricks. Even with such certain huge moves, you can withstand the losses and in fact we can be in profit. So that is all folks. So you can go and practice these adjustments on the options simulator. If you are already an options OPSTRA subscriber, if you are not an OPSTRA subscriber, you can get a trial and practice these adjustments. So that is all, AP. If you don't have any more
Yeah,
questions.
no, that's all from my side. So, what we are going to do now is starting from this option stock, we are regularly going to invite some guests who has been looking at the market. See, everyone knows that uh, different analysts, traders have different ways of looking at the market and approaching the trading style. So we have with us today Vishal Kshatriya, who has an experience of more than 15 years in the market. He has co-headed the derivatives and technical desk at Edelweiss Research, and now he is leading the digital product team at Money Control. So he has his own way of looking at the futures and options market, and which he trades extensively. So right today we have invited him to explain to us what I mean the way he looks at the market and what all research he does. And right now I'll invite Vishal, and over to you, Vishal.
Thanks, AP, for inviting. Uh,
You
is
can
my
show your
screen
screen.
visible?
Yeah. Okay. Yeah. Yeah.
Okay, so today I'm going to share a very simple strategy which I have been following for years, and basically the title I say is as the death of call and put writers. So let me just give you a brief explanation about what this strategy is about. So it's a options max open interest strategy, MOIS. So what we have to do and how to trade this is what I will be explaining in this slide. The first step to start with is identify the stocks where last traded price is close to maximum open interest of call or put. So we will be scanning all the stocks which are in options and mostly which are liquid, and the last traded price should be very closer to the maximum open interest. It could be for both for call as well as put. Once we have this, we are going to track those options on intraday chart, and we will be preferably buying on breakouts. And when to initiate a trade, it's basically a double top buy on above the triple moving average. So basically what I'm trying to do is whenever there is a double top buy or triple moving average on point and figure 1% chart. So let me just explain what exactly we are doing over here is, just let me give you one example. So Bharti Airtel is currently trading at around 499 or 498, and the
No, I think you can
maximum.
give an example of Friday, Vishal. You can give an example of Friday. Bharti, you're talking about for next week, right?
Yes, so I will give you one trade which I had done on on Friday, and that is about this is a list of stocks which was there on which needs to be tracked. These are a call list and this is a put list. These are the list of the stocks you can see over here. Biocon, where maximum open interest in terms of number of shares was this much, and the strike price of that particular call was 450. So what I will do is basically I will go and see a Biocon 450 call option on 1% 1 minute chart. So this is a movement. It opened with a gap up. The moment it opened with a gap up, the Biocon must have also opened with above the max OI. So basically, a call writer at 450 would be in trouble. So we have to keep tracking this, how whether this call writer is able to bring down that stock price or not, or whether they are going to cover their positions or trying to hedge the positions. Anyway, whatever they are going to do, we have to follow the signals given by options charts. So if you see after this big anchor column, we have not seen any double top buy, and the moment it has tested the triple moving average, we have received a first double top buy at this level. So double top buy at this level is around 11.7. This is a level where I will initiate a trade, and I will keep riding the trade unless until we don't get double bottom sell near or below the below the triple moving average. So this is a level where I will be exiting. So this was a very sweet trade from 11 half to 18 rupees on a Biocon. So basically the same thing what I did. So what I did over here is, I know that 450 is a strike where maximum open interest was there. If this level is broken, there could be a short covering rally, and I'm confirming that by seeing that on options chart whether the short covering rally is coming or not.
Yeah.
So
So you have
same way.
already done your research for next week.
Yes. So what I did is, this was for a Friday. What we have over here is a list of stocks for Monday. So these are all list. So what I'm trying to do over here is these are the stocks where maximum open interest is this and the strike price is this and future price is this. The difference between future price and strike price is this. So I have a huge list, but I try to make sure this difference is not more than 1.5%. Same way we have a put list, and what I did is I have highlighted this over here. So this is a trade for Monday. So these are all stocks which needs to be tracked, and you can easily see Jubilant Food maximum open interest is 2400, strike and current market price is 2350. So this is 2% away. Asian Paints current market price is 2038 and maximum OI is 2040. So let us see how the Asian Paints open interest structure looks like. So I go over here, Asian Paints, and this is Asian Paint. So you can see over here there is a huge call writing and a huge tower at 2040 call option. This blue bar is a call option. So now if this stock is going to break this, definitely there will be a people who will rushing to cover this call, or there could be a hedging, or in the option itself by the writers, or they may also prefer to hedge by buying the future. But one thing is very clear, the moment this level is breached and if there is a sustainability about 2040, there could be a short covering rally. So this is of one stock which is under observation. So let us open an options chart of 2040 of Asian Paints. So this is an option chart 1%, and you can see the stock this particular strike price for 2040 call option has corrected from 50 to 30 in span of 2 days. And if I
In
go
fact,
back,
well, my observation is it showed remarkable stability even on the Friday fall. Look at the base it has made near 30.
yes, that's where I had also drawn the
Yeah,
trend line that
yeah,
2930 is seems to be a very strong base, and at the end also it has also given a breakout of triple moving average. So on
right.
Monday, if I see a buy over here, which is DTB level is around 33.9, see 34. This will be a very sweet trade, and there could be a very early indication of 2050 DTB is given. Then it's a very early indication that 2040 is likely to be broken and short covering rally can be seen. So if 34 is broken, the next resistance is coming at around 43 44 level. So this could be a very good intraday trade. The second stock
Yeah.
what I will be tracking on Monday. So there are so many stocks over here. I'm doing pick and choose based on liquidity and also the difference between strike price and a current market price. The second trade what I've selected is a Bharti. So current market price of spot is 497 and the strike price is where maximum OI on call is 500. So you can check over here. I will go to Bharti. So you can see over here there is a huge tower and there is a huge call writing which has been seen at 500 strike call. So if this level is broken, we can see a good amount of rally. Very interestingly, on Monday we have seen some put writers also coming over here, and there is a good amount of put writing also happened. So hedging activity has already been started. But let us focus on the charts of Bharti 500 put and see what's happening over there. So you can see the in these 3 days there was a from 10 rupees it corrected to 4. It has given a buy, and there was a big anchor column on a downside, and followed by a big anchor column again on upside. So this it has also given a triple moving average breakout right in last half an hour. So you can see this is a big anchor column, and if we see a follow through buy on Monday over here, so the DTB level is 8.75, we can see a very good rally over here. If I see the same chart on a 3%, we can see that this call option has been falling from 50 rupees to 4 rupees, and now it has given a very good anchor column, and that too about triple moving average. So if we see a buy over here which is around 9 rupees, and if it breaches this resistance also, which is a 10, then we can see a very sweet trade till next resistance, which is 22. So what will happen is, expectation is the moment stock breaches 500, there could be a short covering rally where a call writer will be rushing to exit their positions, either by buying a call or trying to hedge the positions by buying a future. So basically we don't want to play different way where 500 is a resistance and let us go short on Bharti. What we want to play is a reverse thing, where if any short covering rally or unwinding rally is expected, that is what we want to play. So this is a trade on Bharti. This is a two buy
One
call.
minute, Vishal.
Yeah,
Have you noticed
yeah.
something interesting? I mean, the market has become bearish on Friday, and yet you are looking at two call trades.
Yes, yes. So that is very surprising that even though market is bearish and lot of
Yeah,
frontline stocks have came to a maximum OI level. So if you see Lupin, HCL Tech, Cipla, Infosys, Bharti, Divis, these are all the frontline stocks, and they have came
yeah,
to a max call OI level. This is very surprising.
right.
So this also matches to the view that we have shared, that even though there was a correction, but market are still looks bullish.
Yes. So anything on the put
Another,
side for Monday?
yeah. So on a put side, I have scanned all these things, and what I found closest is the Maruti 700
Yeah,
700 strikes. So let me
7,000.
open, yeah, 7,000 strike. Let me open a chart for 7,000 strike. So you can see over here, uh, though it has again, this huge anchor column has been made by Maruti in last half an hour. You can see that high and low time is 15:04 and 15:07. Though this has seen a follow through buy also, but there is a massive resistance we can see at 170 level. So I will rather wait and watch whether this level can be breached or not. The reason why I will be waiting for this is, if I go and see my option structure chart of Maruti at 7,000 call option, it's not that interesting. 7,000 put option, this is the orange line. What I always prefer in this trade is we should have such massive buildings, and if those massive building and tower are broken, then only we will see a massive unwinding or short covering, and that is where we want to play. So what I do is, from the watch list, I try to first try to see which are the stocks where we can see a such kind of massive towers, and I select, and from that then I see the charts where, okay, this is a chart which is looking good. So I will rather prefer to avoid Maruti, to trade Maruti, for two reasons. The first reason is the maximum put is at 7,000, but it's not a very big tower. So even though there could be unwinding or a short covering rally or unwinding of this long positions, we will not see a strong move on downside. Also, the options chart is suggesting a very strong resistance at 170.
Can you
So
show this on
I would,
3%?
this is on 1%.
Yeah, can you show it on 3%?
Okay, so on 3%, yes, there is a huge anchor column resistance at 170.
Yeah, so no, what I'm saying is if this, I mean, if the market really becomes bearish, this might be a good trade above 170.
This might be a good trade above 170, yes.
Yeah, okay.
But I would prefer that above 170, one follow through DTB is needed, because
Yeah, yeah, of
the
course.
OI structure should support this trade, because right now OI structure is not supporting me that trade.
Yeah. So tell me
So
one
I
thing, how much time do you spend every day doing all this?
uh,
Every evening?
hardly hardly 15 minutes. What I do is I paste the bow copy over here. I have made this Excel where all the pivot tables are automatically updated, and I my
Ah,
list for call and put is over here. And what I have to do is I have to just scan the stocks and options chart for that. So if you see over here, this is my watch list. So there are almost not more than 30 stocks over here. Out of these 30
hmm.
stocks, we can easily make out that Bajaj Auto, or MRF or Mindtree. These are the stocks where we will not see a liquidity. So I completely
Yeah.
avoid looking the charts only. So we will hardly get 10 to 15 stocks daily to see. And out of that 10, 15, I will try to scan top 3 or 4.
Vishal,
Yes.
I have two questions. If you, for example, in this case, if you get the stock both in call list as well as put list, like for example, I see Bharti Airtel, it came in both call list as well as put list, then which direction you choose? So based on the highest way of them?
So I will tell you what has happened to Bharti. Yes, it is there in a, both the list. I would if I would see the historical trend of Bharti. So it has came from down to up.
Okay,
So I would prefer ki and also over here if I see the structure chart of Bharti, you can easily see that this building is much stronger.
Yeah. So
yes,
basically, to put it in a odd way, you're looking at dismantling the big towers.
yeah,
Yes. So
Yeah.
expectation is that this big tower will be dismantled on a very aggressive basis.
okay. And my second question is, I mean, this you're doing it in EOD basis, like you're analyzing after the day is over, and then you're going to trade based on how it opens, right?
Right.
So my question is, if you have a possibility of doing the same analysis, at the opening intraday, can we do the same thing intraday as well? If
Well,
we
see,
get
I
analysis,
we can do this analysis intraday, but this maximum OI strikes doesn't change that frequent during intraday.
okay,
So the EOD analysis is much better, is what I prefer.
okay,
No, but Vishal, this max open interest, that is something which you cannot observe intraday. But I believe in OPSTRA you can observe change in intraday, right? So
changes.
if you see something like that happening in Bharti, let's say from 12 o'clock, then there is a possibility that you might have been able to enter in this 500 call beforehand. Of course, it has not crossed 500, so that is your condition. So that was not met yet.
Yes. But that would
Okay.
be very interesting if we have see right now I don't have infrastructure to see intraday. But yes, if we have this call list and put list for intraday, then definitely it will be a very interesting because what I do is this what needs to be tracked is this difference. So at 12
Ah,
o'clock, this difference should be available where I can see a strike price and future price difference keep changing. If I have this dynamic, then definitely my stocks will be also dynamic and we can identify some more stocks intraday where we can see that some new stocks can evolve and come at around 12 o'clock or 1 o'clock and we can play in the second half of the market.
so Raghunath, we already
Okay,
have that options activity, so maybe this can be added to that, right? On OPSTRA.
yes, yes, we can add this. So I mean, this is a very nice strategy that you have explained, Vishal. And I think putting this on Obstra will make it easy for everyone, including you, to
Yes,
analyze
yes.
at EOD as well as intraday. That is one possibility. I was looking at that. There is also a possibility of doing this in intraday. Maybe we have to observe, like that how it works in the intraday. But definitely see some good potential with this strategy intraday as well.
Yeah.
Yeah, it's
So I
a
just
very good strategy.
agree. Raghu, so there is two things over here. This so Asian Paint and Bharti chart options chart what we have seen. These are mostly intraday and BTSt kind of thing. So if in
Okay.
morning I get a trade, I will keep holding that trade, and at the end of the day I will evaluate whether I want to exit or not based on the structure as well as based on the chart. If charts are looking strong, I will carry forward. The second aspect is yes, if we can have this difference, this stocks list, call watch list and put watch list based on difference on intraday, that would be a great thing on OPSTRA, and this will be very helpful for everyone.
Yes, exactly. So, AP, you have any
Yeah,
more
so that
questions?
is a very good strategy, and in fact, he's shortlisting it very systematically. and taking a trade only on confirmation. So I'm sure there must be a very good strike rate, and you are only going to trade what meets your couple of conditions. So let's see, we'll try to incorporate it in OPSTRA. So you will be able to identify such trades even intraday, and maybe something like 12 o'clock, 2 o'clock, which you can carry forward, BTSt kind of thing. So thank you, Vishal, for enlightening us. It is a brilliant strategy, and I think all viewers will definitely benefit. So that's all from my side, our side this week, everyone. Thank you for being with us, and let's see, maybe next week or in the future we'll definitely have more and more guests like this. Thank you. Bye bye.